Okay. So, in the technical indicator, I was uh, we were discussing about the moving average, right? Okay. Give me 1 second. Okay, this looks better, right? Okay, so first indicator will be the moving average. Okay, let's discuss this moving average. So in moving average, I told you four things are very important. Okay, first thing is the what is the source of the moving average. Okay, so first thing is the source. Second will be the what is the length of that moving average. Okay, and I'll tell you which source is the famous one, and you should choose your for your trading life. And the third thing will be your the formula. What formula you are taking in consideration this moving average. And fifth will be the time frame. Based on a time frame, you can classify that you are doing a trading, intraday trading, or you are taking a trade for positional and short term and long term. Okay, so these four things are very important. Whenever you are applying moving average, you choose carefully what is the source, length, formula, and time frame. Okay, so source I already tell you that most famous source is the closing price. Okay, closing price because it is the most matured price of the stock market. Okay, whenever you see that your stock has closed at this price, so it give you some sense. So if you will consider this closing price, so it will be the most mature one price. Okay, so always choose the closing price as a source, not OHLC 1. I told you OHLC 2, 3 and 4. In OHLC 2, 3, 4 we consider in OHLC 2 we consider high and low, 3 we consider close, high and low, and 4 we consider all 4. So do not consider these 2, 3, 4. It will not give you much sense. So always choose the closing price as a source. And length, this is the most famous length. Always choose 7, 13 and 26. Okay, it will work for intraday, positional and long term also. So decide this length 7, 13 and 26. Okay, and the formula will be your SMA. uh, you can choose the simple moving average and exponential moving average, and third one is the weightage moving average. So if you are doing a trading, if you are doing an intraday trade, so always choose the EMA because EMA react faster than SMA, because an intraday we want fast movement. We want to take a trade as quickly as we can take. So we will choose the EMA because EMA will give you quick buy and sell point. So intraday trade we will choose EMA, and SMA will choose for the positional, short term trade and long term. And we will not use the WMA, weighted moving average. In time frame, in the last class, complete class will be was on the time frame only. So I think you can easily tell me, if you are an intraday trader, what time frame you will choose.
5 minutes.
Yeah,
Five
yeah,
minutes.
best time frame is the 5 minute, and second best time frame is the 15 minute.
15.
Yeah,
Okay.
so first 5 minute will be like it will give you a quick trade, and 15 minute will be to see the prior trend, what is the prior trend. And if you are a positional trader, and if you are a long term trader, so your time frame will be, for positional you can choose daily, and hourly is also good, and long term you can choose a weekly. So this will be the time frame. Based on time frame you can like everything is same, your source is same, length is same, formula is same, but based on time frame you can classify yourself that for what time frame you are for which time you are taking a trade. Okay, so let's start the before technical indicator. Okay, so see, technical indicators are generally two types. First type is the oscillating indicator, and second will be the overlay. Every technical indicators can be classified in these two category, oscillating and overlay. Oscillating means they will oscillate, those oscillating indicators will having a own scale, they will be having own scale, and they will oscillate, like this is a scale line, and they will oscillate up and down. Then this is a oscillating type indicators. They will not having, they will be having their own scale. Okay. And the overlay indicator, what will happen, they will be overlay on the price chart. Okay, this is a, let's say this is a price chart of a stock. Okay, like this I am drawing a price chart, so they will overlay means they can, these indicators can be overlay or can be draw on the price chart itself. So this is a price chart, let's say these are the candle. So in overlay indicator you can draw the same line on the overlay. Okay, you can draw like this. And oscillating, they will be having own scale, they will they will not, they cannot be drawn on the price chart. So if I ask you about the moving average which belongs to which category, oscillating or overlay?
Overlay.
Yeah,
Overlay.
overlay. Moving, yeah, because in moving average it does not have its own scale. Because moving average, I told you how moving average has derived. I told you in the last class that moving average data point are the last closing price ke data. Okay, so moving average data points are the price data only. So you can draw the moving average on the price chart. This is overlay indicator. And if I ask you about the RSI and MACD.
RSI is oscillator.
Yeah, RSI and MACD are the oscillator, because RSI has its own scale. 30, 70, remember? We'll discuss this also. 0, 30,
Yes.
70 and 100. It's having the own scale. We cannot draw RSI on the price chart. Okay, and MACD also, it is having a own scale. That's why it is a oscillating indicator. So there are many technical indicators, but as a beginner, we are a beginner. Okay, still. So as a beginner, we'll discuss these three indicators. Number one, we'll discuss about the moving average, that is overlay indicator. Number two, we'll discuss about the RSI, that is oscillating, and we'll discuss about the MACD. These three indicator we will discuss. Okay. Okay. So before going further on the technical indicator, there is a one more topic that I want to explain you, and it's a very important topic as well. Okay. Uh, Primary trend. Then we will go on the indicator part. Okay. So uh, that's a different topic. Okay, in the primary trend, I forgot this topic to explain you in the last class. That's why I'm explaining you. Okay, so see, a primary trend have three phase. Always a primary trend will be having a three phase. So we are going to see what are the three phase of the market, and will also see that currently we are in which phase. If you easily guess na in which phase you are, okay, you have to just guess in which phase market is currently. So what are these three phase? Accumulation phase. Okay, let me know. Accumulation phase, participation phase, and distribution phase. Again accumulation will start, again participation will start, and again distribution will happen. These are the three phase: accumulation, participation, distribution phase. You just need to guess in which phase our market is currently. So currently if I okay, I'll ask you in which phase current market is at. So these are the three phase: accumulation, participation, distribution. A uptrend, how market generally forms? How a uptrend is, I told you uptrend is higher high and higher low, right? That's why this is a uptrend, because
Yes.
market is breaking the previous high and making a new high. This is the uptrend. Okay, any uptrend will look like this: higher high, higher low, because highs are also getting high and high, lows are also getting higher and high. That's why this is a uptrend. So let's see how this uptrend is created. Okay, so I told you accumulation, participation, distribution. Now see, market is going down. Currently our Nifty is going down. This is a downtrend. Now how uptrend will look like? If in Nifty a primary uptrend will come, then how it will look like? It will take some support, at it will become undervalued at some point of time. It will become undervalued. Let's say it become undervalued at 21,000. Okay, I'm just giving an example. Now at this phase, fundamental analyst will enter in this, and fundamental analyst will keep accumulating the stock and keep taking this up, right? Okay, let me draw here. So I will, okay. Okay. Okay, see here. Market is going down. Some at some point of time it become undervalued. In this undervalue, it will take support definitely. And FII fundamental analysts will start accumulating the stock, and they will keep taking the price up, right? Now, technical analyst is also there in the market. They will see that at this point this market has given breakout. So now technical analysts will also start buying at this point of time. So this is the accumulation phase. Okay, this is the accumulation phase. FII are taking the stock. This is the accumulation phase. TII is also getting. Now market is going up and up. Now at this point retail investor also start taking the stock because they are seeing that market is going up. Retail investors are also taking. FII is also buying. TI is also buying. RI retail are also buying. This is the accumulation phase. No, this is the participation phase, not accumulation. Accumulation phase will start from the fundamental analyst, and TA will start buying, then retail will also buy, and these three will take this market up and up and up. This is the participation phase. And what will happen at this point? Market will become overvalued. Okay, because these undervalued and overvalued levels are only known to the fundamental analyst. So these at this point market will become overvalued. So what will happen? These FI this fundamental analyst will keep selling this stock, keep selling the market. Okay, the market will come down. This will be your distribution phase. This will be your distribution phase. Distribution phase will start from the FII, from the fundamental analysis, when they will start selling. Okay, at this point what will happen? Because this was the previous resistance. Now market will take support at this point because this is the previous resistance will become support. Market will take support at this point, right? And at this point, in the distribution phase, retails are also panicking. When FII is also selling, our retail investors are also selling the stock. Okay, this is the distribution phase. Now market will again take the support and market will again going up because TA has started buying. So market will again go up. Okay, and then again accumulation phase will start. So market will repeating these phase: accumulation, participation, and distribution phase. Again accumulation, participation, and distribution. You just need to guess in which phase currently our primary trend is. Where is our primary trend? So if I told you from 18,000, from 18,000 market went to 26,000 some around. Okay, so at this point, these fundamental analysis will start now. Now we are in the distribution phase. Okay, right? Market is in distribution phase currently. Then it will take support, and fundamentals will keep buying, accumulating. Then these are the three phase of the market. So if you see any like whenever market is going down, so I don't, if you understand these concept now, accumulation, participation, distribution, you will never get panic in the market because this is the general how market uh, generally primary trend will be like this only. And primary trend का length minimum 1 year होना चाहिए. Okay, and then there is a secondary trend is also come in the primary trend, because the primary trend cannot be like this. Okay, it will be some selling then again, like so these are the secondary trend. Okay, when market give pullbacks, na, these are the secondary trend. Okay, and the third trend are the always noise. Okay, generally a primary trend, when it's going up, market will give the pullback, then again uptrend and pullback, then again like this. So in this accumulation I just explain you about the uh, three phase of the market. Okay, great. So any doubt here how the market generally moves, right? Okay, great. So let's start the technical indicator, okay, part. So in technical indicator, first is the moving average. Okay. So see, in a moving average, uh, whenever price cross its moving average, we consider this as a buying point. Okay. When the price cross below its moving average, own moving average, we consider as the sell point. Why we consider? Because price is the fastest thing na, because price will move fastest and moving average will move slow. So we are just comparing fast and slow. When the fast is moving, crossing above the slow, it's a good point, it's a good sign. Okay. Because you can understand is like this, that there is a student in the class and his average score is 65. Okay. This is the average score, this is the moving average. So his average score is 65. So but this student score more than 65. When it is score 90, it's a good sign. That's why I am saying, when the price when the price go above the moving average, it's a good sign. It's a something, like you can say that this is buying is coming, it's a good sign, so buying. And the price is moving below the moving average, is sell point. Okay. So you can compare fast, we are just comparing a fast versus slower. We comparing versus fast versus slow. So I can compare price versus moving average. But don't you think that if I compare price and moving average, it will give me a lot of false signal? Because price is a zigzag, price is generally move like this. Okay. So price is like this. Okay. It's very noisy. And moving average, because it's a average, so it will give you a line like this. So if you compare price and moving average directly, so it will give you lots of false signal. Okay. We generally don't compare price and moving average. So we how we will take our buy and sell point. It is all about fast versus slow, right? When fast is crossing above slow, it's a buy point, and when the fast is crossing below, it's a sell point. So if it is about fast versus slow na, so now I will make a moving average fast and another moving average is slow, and then I will compare. I will simply compare one moving average with another moving average, because so that I can get clear buy and sell point in the market, right? So now it is very easy how I can make the moving average fast. Can anybody tell me, if I want to, because moving average is having these four things, right? These are the four things of the moving average. Can anyone tell me how I can make a moving average fast?
Smaller time frame,
Yeah, time
uh,
frame is good. And
and
what is the
plot
easiest
it
way?
again.
What is the easiest way in the source length? If I change the length, or if I change
Length, length.
length is the easiest way. If
Yeah.
I ask you length 5, MA5 and
Uh,
MA20, which will move
uh,
faster? Which will be the faster, 5 or 20?
five will move faster.
Yeah, 5 will move fast, because in this MA5 we are just considering 5 days ka data. Okay.
Mm.
Last 5 days. In 20 we are considering last 20 days ka data. Okay. That's why
Mm.
this will move very very low, because it is having last 20 days ka average. Okay. So I will just change the length. By changing the length, I can make them fast and slow. And in formula also, if I ask you na, simple will move fast or EMA. By
Mm.
formula also I can change. So that's why EMA always fast than simple, right? So I'll just change the length, and we will just compare MA7, MA13 and MA26. Okay, these are the length 7, 13 and 26. So we'll compare these three moving average. I will make this is the fastest one. When the fastest is closing these two, 13 and 26. Why 13 is crossing is also good, but 26 because of the double confirmation. Just I wanted the double confirmation that this 7 is crossing 13 as well and 26 as well. It when it cross both na, you will buy. Okay. And when MA7 is going down na, both 13 and 26 on the chart also we will see, then you can sell. Okay. So simply how it will look like this. See, if you want to buy point na, this is the MA7 line. Okay. And this is the MA13 line, and let's say this is the MA26 line.
Sir, I have a question.
Yeah, this is a MA26 line. So this will be your buy point. Do you agree?
Sir, yeah, I have a question, sir, because we cannot put three indicators in trading view and
Yeah, if you yeah, you are not allowed to put now, then you can put 7 and 26. But you can put in your app, if whenever, like you, whatever app you are using for your investment now, you put these indicator in
mm,
that app. Okay, double confirmation will also be requiring.
sir, will you show this on chart later?
Yeah.
Or
After
okay.
discussing RSI and MACD, we'll go to a chart also. Okay, so MA, I think moving average is clear, right? It is
Yeah.
very simple. So, and the length also, remember for long term, we'll compare 50, 100 and 200. Okay, 50 ka moving average, 100 ka moving average and 200 ka moving average. If you want to take for the long term, na, so compare these 50, 100 and 200 on the daily chart.
And this 50, 100, and 200 will work on daily, weekly, and
Yeah, put daily and then weekly also good. If you want to
okay.
take it for very long term point of view, na, so
Mm,
and when we see that price is going, when we see that price is still above the 100 moving average. Okay, so what generally it look like that, uh, stock is, long term trend stock is still bullish, price is going down and down and down. So generally what it will take support either from 50 moving average, or either it will take from the 100 moving average as a long term point of view, and generally it will be at the above the 200 moving average. It will be very like, it is like, if it goes going below the 200, so it means like long term, something is in the stock, something is like very bearish. So still nifty is above the 200 tema.
sir, and
So you
50,
can,
100, and
compare
200.
price also, in this also you can compare price. Yeah.
Sir, either 50, 100, and 200 will also work in BTST or not?
No. For trading point of view, just compare 7,
Mm,
13 and 26 only.
okay.
Yes. For intraday trader, for positional trader, and also on the daily chart also you can put this 7, 13 and 26. Okay. I am
Okay.
saying about
Okay.
50, 100 and 200 because if you want to take a trade for investment point of view, na, so this is a like 50 ka moving average. So when your market stock is going down and down, it has crossed 17, 13 and 26. Everything is like cross. It is keep crossing the, okay, 17 is below 17, 13 below, 26 below. So but it can take support at this point 50. Okay, and then it can go up. So we'll see this on chart also. Okay, so in moving average, any doubt?
Sir, you mean that moving average will only work in intraday, that is 5, 15, and daily?
Five, which one? 7, 13 and 26. Yes.
Yeah. Okay.
7, based on 7, 13 and 26. It can work in intraday trade. It will work on
Mm,
positional trade, and it will also work for the long term. For long term also, but you just need to change the time frame. You need to change the time frame of your chart.
okay. So
Yeah.
time frame, long term का time frame 50, 100, and 200 हो जाएगा ऐसा?
नहीं
No, no,
that,
time frame means
no time
daily,
frame.
weekly, monthly.
Yeah, time frame for long term, the time frame will be daily or weekly.
Okay.
Yes,
Or for intraday, your time frame will be 5 or 15 minutes.
5 or 15 minutes.
Yeah,
Correct.
positional, put it on the daily. If let's say, let's clear this 50, 100 and 2, what it look like. Okay, so if I ask your price is going below 50 moving average, okay, it's a good sign or bad sign?
It is
Bad.
declining,
Bad.
bearish.
It is bad, and it is not bad, it's very bad.
Yeah,
It is not bad, it is very bad, because 50 moving average is, means you are considering last 50 days ka data, and your market, your stock is crossing all those last 50 days ka closing ka price, so it is a bad
mm,
sign.
bad sign.
Generally when we say your price is crossing, like it is crossing the 100 days ka moving average. 100 days means let's 5 months, generally 5 months. Okay, you can call it as a 5 month. So your market is like coming below your last 5 month ka data, so it is a very bad. Okay, and 200 days to like it is, if it is crossing the 200, it is not taking the support at 200, so it means like something is beginning, something bigger is happening in this stock. Okay, so that's why I'm just also compare price and these data, price with 50 days moving average, and this will be the daily moving average, 50 daily moving average, 100 daily moving average, and 200 daily moving average on the daily chart only. Get it? And this will be the, this 17 13 26 will be the to take a trade, to take the buying and selling point 7 13 and 26, you need to change your time frame. When you are, when you are comparing 7 13 and 26, you need to change your time frame based on like intraday trade, positional, and long term. I hope is it clear? Okay,
Yeah.
so we will generally using this 7 13 and 26. Okay. Okay, I'll request you that if this meeting ends in some time, it will end in I think 10 minutes. So please join the link same on. Please join back on the same link. Okay, so we'll be here. We'll connect it here only. So let's discuss about the RSI also. Okay, first indicator we have covered. Next is the RSI. In RSI, this is a oscillating. This is a oscillating, yeah, because we cannot plot it on the price chart. RSI will having its own scale. What the scale of RSI will be? 100, 0 line, 100 line. Okay, then this will be the 30 ka line, and this will be the 70 line. This is a famous one. Okay, and there will be the middle line, that is 50 line. Okay, so this RSI scale is 0, 30, 50, and 100. Now how you can take trade based on RSI? So see, this will be considered as the undervalued, or you can say oversold. If your RSI line is coming in this zone, then you can say market is oversold and this is your overbought zone. Okay, great. So in RSI, your market is coming down from overbought zone. Let's say from overbought zone, it is coming down, down, and down. Your RSI line is coming. Now it has entered in the oversold zone. So, and this, when it is entering in the oversold zone, you do not need to take a trade. Okay, because it can be oversold for 6 months as well. So at this point you cannot take a trade. Let it go down in the oversold zone. When it is coming out of the oversold zone, na, this will be your buy point, because after oversold zone, your market is coming out of the oversold zone, means you can buy at this point. Okay, when it is entering in the overbought zone, do not take trade. Now it is entering in the overbought zone, and it can be it can be overbought for 6 months, 3 months, whatever time, I don't know. But when it is coming out of the overbought zone, na, this will be your sell point, because market has become overbought and now it is coming, because market will keep moving from overbought to oversold. So now it will come back. So when generally in RSI, what is the famous one? What is the famous one? It is generally when it is coming out of the 30 ka line, you can buy. When it is coming out of the 70 ka line, you can sell. Okay, so you can use this RSI for to identify the overbought and oversold zone. Okay, so this is a 30 line and this is a 70 line. This is very simple, right? We'll see this also on chart. Okay, so I hope is it clear? No doubt, right? Okay,
Yeah.
sometime some people also change this line to 40 and 60, right? Okay, so but I am not telling you because these are the personalized one. So what is a famous one? I am telling you. Okay, because famous works in market. Be with the famous, always be with the famous. I told you in the last class also, be with the famous, because everyone is, when everyone is following the famous one, na, the chart also moves. So be with the famous one, 30 and 70. Okay, now third is the MACD. MACD is also famous indicator. I am telling you the most famous indicator. Okay, famous indicator. So MACD is the moving average convergence divergence. Okay, so in MACD, it is also a oscillating indicator. Number one, it is oscillating indicator because it is having its own scale. Okay, you cannot draw this on the price chart. So what is its own scale? It will be having a zero line. Okay, when your MACD line is crossing, it is very simple. When your MACD line is crossing above zero, na, that will be your buy point. This is a MACD line. When your MACD line is crossing below zero, this will be your sell point. But but I would say that do not use this MACD frequently. Okay, this MACD can give you lots of false signal. Combine MACD, RSI, combine
And
MACD,
moving average.
yeah. On moving average you can take a trade, okay, individually also on moving average you can take trade. You can take trade on 7 13 26. So these three are the famous indicator, and fourth is the, like I'll show you fourth one in the chart only. Pivot, support and resistance, okay. And fifth I in the previous classes I told you about the volume indicator also, right? This is the, always use the volume indicator, like always combine volume indicator with these indicator. Volume indicator, volume is generally to confirm the trade, right? It is for confirmation. अगर ज्यादा वॉल्यूम हो रहा है, ज्यादा में शेयर में ट्रेडिंग हो रही है, इट मींस मूवमेंट ज्यादा आ सकता है बाई एंड इफ द वॉल्यूम इज हाई मूवमेंट कैन बी मोर बिगर. If your volume is going up and price is going up, then it's a real uptrend. I told you na in the last class, then it's a real uptrend. When your But if your price is going up, if your price is going up but volume is very low, like शेयर में ट्रेडिंग नहीं हो रही, then this uptrend can be fake and this uptrend is not sustainable. So use the volume also, okay, on the chart. So how your screen will look like, okay, let me draw your screen. If you are taking a trade, okay, how your screen will look like, this will be your general screen, okay. At and this your candles will start forming. This will be your price chart. This will be your price chart, right? Like this you will see candles on the screen, okay. Then you will see some red candles as well, okay. So number one, you will put price ka chart on your screen. Number two, you will put the technical indicator, okay. Let me put moving average, okay. If I am using moving average, I will put technical indicator moving average. So moving average ka line, if it is a because it's a oval indicator, so we can draw this on the line, we can draw this on the price chart only, okay. So this like this your moving average will look like, okay. If you are drawing three moving average, so this is MA1, let's say this is MA2, okay, and okay, let's say this is MA3 also, okay. Put price chart, moving average, and below this your volume chart will appear. Volume chart is a bar chart, okay. So let me draw the bar chart also. Here you will see the volume ka data. These are the buildings only, okay. So like this you will see the volume is just for confirmation, so that you don't trap, okay, in the market. So like this you will see the volume. Red also, because red volume is also there. Red and green color doesn't matter in volume. You know na, volume is just a quantity. So do not confuse that. If it is a green, you would buy. If it is a red, you should sell. Do not confuse like this. Volume is just for confirmation. If it is a green, means at this price na, शेयर में ट्रेडिंग या फिर बायर एंड सेल, देयर आर मोर बायर्स एंड सेलर्स एट दिस प्राइस, okay. That's why this is a higher volume, okay. So this will be your volume chart, look like this. So this will be a standard skin, because I don't want to confuse you that put lots of indicator here. Just be simple. Be with the famous. Number one, be with the famous. Number two, very simple technical indicators we will use, because we are a beginner, okay. We'll use moving average, price ka chart, okay. If you like in the price chart, what we'll see the candles, what type of candles are there, okay. We'll see that candles, and then we'll see the volume for confirmation, okay. Is it clear? Like, right?
So RSI and MACD will not use.
Yeah, if you want to use the RSI also na, you can use. So RSI also you can plot, but RSI will be look like, okay, at this means it will be having your own scale. So use the RSI as well, okay. You can use the RSI in MACD also, okay. But this moving average will work more, okay. This like if you are using the RSI na, you may get confused also, and MACD will confuse you. But this RSI, if is RSI is saying that your Nifty has in the oversold zone, and it is now coming out of the oversold zone, and your moving average is also saying that your 713 and these lines are crossing, and the volume is also saying that, yeah, volume is also high. So you are getting a triple confirmation. So put RSI, MACD also, right? Now MACD you don't need to put, I put RSI, okay.
Okay.
But these are the must, like moving average, volume and price, these
What?
three things are the must now, and then you can play. But I don't, because you cannot put, I think, all of them together, because if you need to buy the paid subscription of the
Paid version of
paid
trading
version
view.
of
Yeah.
that. Yeah, that's why I'm saying that just put a moving average, volume, and the price. Okay, so let's go to chart now, right? Okay, any doubt here?
No, it's okay.
Yeah, okay, okay, great. So let's go to chart and see these things also. Okay, and let's try to take try to identify buy and sell point. Okay, and I hope you have attended that Japanese candlestick classic chart pattern also. Okay, so we can find out those patterns also. If you are also notice those patterns, na, try to tell me also. Okay, so okay, let me stop this and let's go.